Can you hear me?
Okay.
Hello, everyone. Well, that didn't take very long, did it? And all I can do is apologize. I have absolutely no idea what happened. I simply started the webinar as I normally do, and for some reason, it just would not load onto my system. So we uninstalled, reinstalled. Anyway, all I can say is thank you so much for your patience, as always. And we will get this Forex session underway, where we will be looking at, well, now it's be the US market, using the NinjaTrader platform with some of our quantum trading indicators. Before we do, can I just draw your attention to the disclaimer that I know you can see on your screen. It's, as you know, this can be a very risky business, so please don't ever think of using money that you cannot afford to lose. I know we have some new people joining us today, so again, you're very welcome, and I do apologize once again for the breakdown with the webinar software that we use, the GoToWebinar software, which I have to say is normally 99% reliable. Anyway, in this session, along with all the other sessions that David and I do, is we look at the markets through the prism of volume price analysis. That's and I know we also have visitors to the webinars who've just bought the books. This is the complete guide, which is, if you like, the foundation book to the methodology. But there's also a Forex for beginners version as well. And what we've also done recently, if I just quickly scroll through my my little things here, is we've put together what we call a complete Forex trading library, because volume price analysis is just one element of what you use to trade this very complex market. It's not a complicated market, but it's a complex market, because VPA is the, if you like, the technical arm of the of trading, but you also have to understand the fundamentals, and not only the fundamentals but the related markets, how they can impact the currencies, how currencies can impact related markets, and more recently, if you like, the political element, the political aspect of which we have here in the UK. We have a Brexit which is ongoing and has and is producing some incredible volatility, and with volatility comes trading opportunities. Now, in these sessions, we look at VPA, we look at the charts, we look at the live charts, we do look at historic price action. We examine it, but the purpose of these sessions is really to see how we can apply VPA to the live edge of the market, taking into account all those other elements that we have to be aware of, and that is namely the fundamental and the related markets, but also increasingly, what is the political element, what is the political slant, how are politics influencing what is happening on the charts. I'm just going to stop there. I'm just going to pass over to David quickly. I know he's got some things that he would like to say, and then we will continue.
Hello everyone, and apologies again on both our behalves. I have no idea. It's something we've done 1,000 times before, and just for today it refused to cooperate, so many apologies. Just very quickly, if you do have any questions, then please just drop them in the chat box. Always happy to answer them there for you. If they're short questions, if they're longer ones, then we'll answer them on air for you. And in this session, we just focus primarily on the NinjaTrader platform for trading Forex. So I'll pass back to Anna. I've got, I think Anna's on, are you on 7 or 8 over there?
7.
Anna's on Ninja 7, I'm on Ninja 8, so you get both platforms here. And as I say, if you do have any questions, please just drop them in the chat box for us. I'll pass back to Anna and we'll get going.
Before we actually go to the charts, and I've got the workspace I've got here is cable, because of what's been happening with Brexit, and just to give you my thoughts of where we are with the price action at the moment. But I know some of you were with us at our Tuesday session, which we do just after the start of the London session, and At the beginning of that session, what David I covered were what were going to be the risk events this week. What was going on in in the markets, what's swirling around the markets at the moment that is going to cause either volatility or perhaps some major reversal. And it's obviously Brexit was top of the list because we had the vote for the agreement that the government was putting to Parliament, it's an agreement basically so that it gives them permission to go, to enter the negotiations, if you like. Now, as you know, that was rejected. Then there was a vote of confidence called in Theresa May, and that was yesterday, and she overcame that vote of confidence. She won that vote of confidence, so she is still nominally in charge, as it were. But Brexit is not the only risk event that is out there at the moment. As you know, there's in the US we've got the shutdown still ongoing, and as I said on Tuesday, there's even all sorts of rumours circulating that maybe Donald Trump is a Russian spy. And I said, I mean, goodness, if you were a Hollywood filmmaker, you couldn't make up such a story. But there we are. But we also have earnings seasons coming, underway as it were, and that's going to have an impact of what is going to happen to the dollar. We've also got the Fed, and as well as the usual, we've got China, we've got tariffs. There's a fall in exports that was reported by China last week. That seems to have spooked everyone temporarily. Japan has also posted a reduction in what's known as machine orders. And in Europe has also got obviously the issue of having to deal with the UK, but it's got its own problems. It's got problems with a slowdown. Germany has just about avoided a recession, in the sense that I think the calculation for a recession, because they either put in an extra day or took out an extra day, has meant that they didn't tip into a recession, but they're in a slowdown. All of these fundamental news items, political elements, they all are all going to be reflected in what is happening in the forex market, either in individual currencies and in currency pairs. So as risk sentiment changes in the markets, you will see that immediately in the forex market. It's the market that really responds the fastest to any shift in risk sentiment, to fundamental news, and to any political problem. So as I said, it's by all means, however you load your charts up, whether you use proprietary indicators, standard indicators, you may use, however you formulate your approach, your technical analysis approach, you have to be aware of all these other factors that will drive the price that you see on your screen. Now, my Ninja 7 is very different, as you can see here. My workspace is, the way I configure mine, very different to how David does, and it's just to give you a flavour of the different ways that you can run the platform with or without the indicators. And I know we've got some users in the room, and I've seen some charts, and they have, they configure their charts very differently. But very, very, very quickly, what I have here, I have the 6 charts. I have the currency strength indicator, an absolutely vital tool for any forex trader, because this tells you at a glance what an individual currency is doing. Is the market buying or selling? As we can see here, the Canadian dollar, this purple line, is it buying or selling the US dollar? This red line, is it buying or selling the British pound, which is this yellow line? That is the first port of call. It gives you an instant heads up in a particular time frame of what the market is doing with regards to an individual currency. Now, that's the first, if you like, that's the first step, if you like. I then have here, I also have, because this is a major and it's got obviously got the dollar, I also have a dollar index. This is our own version from Quantum that we have developed, because if you're trading a pair that has a dollar, you need to know what the dollar is doing globally. Is it being bought or is it being sold? And then I have a Renko chart, and I have 2 time charts, the 3 minute, the 10, and I've actually put a daily chart, because if you are an intraday trader and on the faster time frames, perhaps with a non-time based chart such as Renko and a 3 minute, a 2 minute, a 1 minute, whatever it is, you need to see what is happening. You need to place the context of that price action in the context of the daily chart, and the daily chart for cable is immensely fascinating because the candles obviously reflect the volatility and the wild swings in price that we have seen for the pair. And this is the candle. This is the day before yesterday. This is Tuesday. This is the day that the vote was held in Parliament for the withdrawal. Was it the Withdrawal Act? And it's actually called the Withdrawal Act and Political Declaration. And what we see here, there was a huge sell-off in cable. In fact, it started just after the London session. Then, as the vote got closer and closer, what then happened? It actually came all the way back and posted this sort of, I suppose you'd call it a huge sort of doji type candle. And as I wrote on my blog, with any kind of news, be it fundamental or political, traders see this in kind of very black and white. So, for example, if they say, well, it's bad news, it's going to fall. And if it's good news, it's going to go up. And in fact, it doesn't work like that. Often a market will go up on bad or very bad news, and it will go down on good or very good news. And as we said in the early morning session on Forex, this was not going to be a binary, it's either going to be good or bad, it's going to go up or down. It's much more nuanced than that. And the reason, as I suggested in my post, that the reason it really regained all of the day's losses in this, as you can see here to the bottom of this candle, this wick to this candle, this is all the buying coming in after the government had lost the vote. And the prime reason appears to be is that the financial markets have taken the view that because of this defeat, the whole Brexit thing may not happen in the way that perhaps the strongest supporters of Brexit are going to imagine, that somehow it's all going to be fudged if it actually going to happen at all. And that is and the markets are very happy about that, because a no deal Brexit, where basically the UK just ceases all relations with the EU and has to move over to what they call WTO terms, is something that seems to terrify, the great and the good. And it's a kind of sigh of relief, as it were. But from a technical perspective now, we have actually got a very clear level that the pair has to overcome if this is actually going to carry on high. And I said in the post it's in the 129 region. Now, yesterday we see here we had more buying of the British pound. Not, you've got a wick to the bottom of that candle, a reasonable amount of volume in there, not hugely, not a huge amount, and that was on the result of the vote of confidence. I suppose that was much more of a binary thing. Yeah, she won that. That was good news. There's stability. There's not going to be a general election yet. So the markets were relieved, as it were. So that's where we are with cable at the moment. And what I actually said at the end of the post was, yeah, fine. Be aware of the news, be aware of what's going on, but you really need to, with the help of VPA, and if you have the quantum tools as well, trade what you see on the chart. Don't have a preconceived opinion that, if it's going to go this way, then X is going to happen. If it's going to go that way, Y is going to happen. Because you will, because most times on the chart, you will see the exact opposite. That sets up what's called cognitive dissonance in your brain. Your brain is saying, because you have this bias and this strong belief, perhaps, your brain will start to struggle, and you will kind of doubt what you see on the chart. But with VPA, I really do assure you that it will give you the confidence you need so when you see something like this, the pound crashing, if you are going lower and lower, but then suddenly the spike being created as buying comes into the market, a lot of traders who maybe have a strong bias would say, "Oh, great, it's time to go short again, time to go short again, because I'm it's having a correction, but it's going to go down lower," because the bias is playing out in their heads, and you mustn't allow that to happen. I know David's got something to say about that. David, do you want to add your opinion, your things of that? And then what I also want to pull out is just later on is a really lovely email I had from someone, which I was going to mention in our next session on indices. He's a trader of the NQ, and he tells me that until he started to introduce volume or VPA concepts into his trading tactics, I think he lost 30,000 K in his account. And now, with the help of volume price analysis, the concepts behind volume price analysis, he has actually turned his life, his trading and his life around, and I'm absolutely thrilled. I'm going to ask if I can possibly use his, quotes from his email, on our site and what have you. You have to be a little bit careful what we say on the site, and hopefully, obviously not not identifying him overtly, but hopefully he will give me permission to do so. I was absolutely thrilled when I got that email. I was thrilled for him, because the thought of losing $30,000 over a period of time is not a good thing.
Thanks, darling, and apologies once again for the very long delay, and appreciate you waiting for us to sort ourselves out technically. Just to pick up on what Anna said, it's very, very easy to trade with an opinion, and you have to put those to one side. You really have to leave your opinions at the door, because it's not about what you believe, it's what the markets will react to, how they will react, and how the volume will display and confirm the price action. And some recent examples, we've had quite a lot of examples where we've had oil, for example. We had a very, very long bearish trend, and it was almost a no-brainer day after day after day, when actually I suppose your common sense logic is telling you that this is a limited resource. Ultimately, it should go up in price. Why is it falling in price and falling in price this quickly? Gold is another classic one. I'm sure you're familiar with the gold bugs. They believe that gold should always increase in value for similar reasons. It's very limited supply. It's stockpiled. It's precious metal, and therefore it should go up. So why can it fall? Why does it fall? It's that sort of thought process, and the number of times that the euro, it's been written off, it survived, it's been written off, it's been hammered, it returns. It's that sort of thought process that is so difficult, and it's exactly the same with the pound right now. Very easy to get into a mindset where you think, okay, Christ, this is bad news for cable, bad news for the pound, whatever it may be. You have to put that to one side and just look at the volume associated with the price action and draw the appropriate logical conclusions, which are not based on what you think, because it doesn't matter what you think. I'm just going to pass back to Anna. I've been on the CAD yen, which is on a reversal. I'm also on the Aussie dollar at the moment, which is continuing to fall, because we've got some decent strength coming in on the dollar, as is on the faster time frames. So I'm just going to pass back to Anna, and we'll flip-flop between the screens.
In fact, we'll pass over to David, and I'll go and dig out that email. And there's a comment from David in the chat here in this session, and that is, as the dollar has caught a bid and the buying of the dollar, that has helped to push gold lower. And that's one of the relationships that you will soon begin to understand and use to your advantage when you are trading forex. It's the intermarket relationships, the cross-market relationships. Gold and the dollar is a classic one. It doesn't always work 100%. Nothing ever does, but it pretty much it is pretty consistent. And the time to worry, if you like, about gold and the dollar is when they are both rising very, very strongly, because oh my goodness, then financial Armageddon may be just around the corner. So generally speaking, if the dollar is being bought and being bought strongly, you'll find gold and a lot of the other commodities for. Anyway, let me pass over to David, because he's got NinjaTrader 8, which he will where he showcases the indicators, and he actually uses in his trading. And I will keep an eye on cable, which is actually quite sort of moribund at the moment. This is my Renko chart. This is set at, let me have a look what this is set at. Let's just say, 4 Renko. So that's on 4 pips. For every 4 pip move, a Renko brick will post. The Renko Optimizer is a relatively new indicator to the quantum suite, and it basically allows you to set the correct brick size for the time frame that you are looking to trade. It works very differently to the one to how the Renko is calculated on MT4, MT5. So, for example, if the 3-minute chart, which I think this is, were my preferred chart to trade, I simply click that, and then it automatically recalculates what the brick size is. And in fact, for the 3-minute, it's actually gone up to 7 Renko. So it is actually quite slow at the moment. So if you were an intraday trader and you were simply looking for an opportunity, maybe cable possibly at the moment is not one that you would immediately gravitate to. There's moves elsewhere. But if cable was your pair that you focused on, having this information also tells you when to stay out, because knowing when to trade is fine, knowing how to get out is fine, but it's actually knowing when to stay out, because nothing's moving, the risks are too high, it's in very deep congestion, it's waiting to break a significant level, either to the upside or the downside. So you simply have to be patient, which is why we always suggest, and this is something we put forward in our forex program, we say when you start, don't focus just on one pair. Put together a little stable, maybe 1, 2, or 3. Really get to know them, and try and pick pairs that will move in the session that you are looking to trade. This is a 24-hour market, but not all pairs move equally in this 24-hour cycle. Some are more active, some currencies are more active than others at different times of the trading day. You need to find out what they are, and there's lots of resources where you can do that. So you kind of refine, you put together the pairs that you would like to trade. David and I, we're much more indiscriminate. If not indiscriminate, that sounds very negative. What we do is we look at our charts, we look for trading opportunities, and we say, yep, it could be in cable, or it could be in a cross pair. I've got some trades, I've still got some trades on this week on mainly cross pairs and 2 yen pairs. They've given me some some great moves, and now they're pulling back, and I just have to wait and see what happens with the market. I'll just pass over to David now.
Just switching screens. Hopefully you can see my currency strength indicator, which I've got on 5-minute. And this is always the starting point. Whatever you're trading, as Anna said, whether you're hunting out, whether you've got restricted pairs, whatever it is, this is the starting point. It really tells you all you need to know right now without even going to look at a chart. What's self-evident on this particular time frame, to say this is on 5-minute, the red line, which is the US dollar, is rising very strongly, coming up to a little bit of a pause point. So in looking at the dollar, if you were looking at that point for a trading opportunity, then you're looking for a currency that is moving in the opposite direction, hopefully with similar sort of strength to the downside. So in this example, I have got the Aussie dollar up at the moment on the multiple time frames, because when it started to cross and move down here, we had a nice trend developing, because the Aussie was falling pretty much as quickly as the US dollar was rising. And as Anna mentioned, the cable was not moving anywhere in particular, and the reason for that is because the yellow line here, which is the British pound, was pretty much moving around with the US dollar. So when the two currencies are moving like this, there is no trend simply because those two currencies are moving at similar speeds. So there is no force, a divergent force, to drive the two sides of the equation, if you like, the two sides of the currency pair, to actually drive momentum into it. So you're seeing congestion. Equally, when you've got, I mean, I could pick off the pairs here without, as I say, without looking at a chart. This is the New Zealand dollar, this is the Swiss franc. What's that doing right now? Well, it's in congestion because they're moving in the same direction. The same could be said of the Aussie and the euro, this orange line, the euro. When they're moving down here together, nothing much is happening. The other one that I had my eye on earlier on was in terms of the CAD yen, because the CAD yen, the Canadian dollar, this purple line was falling very strongly, whilst the Japanese yen, this magenta line, was rising equally strongly, and that was developing a nice trend. Then what happened as this bottomed out into the oversold region, we started to see the pause point develop, and there was volatility. So you start to put that all together, and given the fact that the Canadian is right down at the bottom, given the fact we've got a volatility trigger, the expectation is we're now looking for a reversal on that, which is now starting to develop quite nicely. So we've got strongly rising Canadian, strongly falling yen. And of course, in terms of the yen and yen sentiment, what we'd also be looking at is the what's going on in terms of indices on Globex, because we're trading at 13:48 our time. We've got about another 45 minutes to run before the US markets get underway. So we're still trading on Globex, but we've still got 24-hour sentiment in terms of risk on or risk off, which is duly reflected in the Japanese yen. Once you've picked out your pair and maybe trading off a chart, then the other aspect to it is you're trying to figure out whether the sentiment for that particular currency and currency pair is universal. And I've just isolated out the dollar here on the currency matrix. You can see here these little toggle buttons up and down. You just toggle on and off. So you either have all 28 pairs, or you can isolate out to a particular currency. I've just isolated out to the dollar here. And what is self-evident from this particular time horizon is that we have a perfect combination. We have a, to use a card analogy, we have a full house. A poker analogy, we have a full house here. We have all these three pairs ranked at the top. So we've got strong buying against the Canadian, the yen, and the Swiss franc, and equally strong buying down here against the pound, euro, Aussie, and New Zealand. So if we're trading the dollar, we can be assured that sentiment towards the dollar is universal. Everything is stacked up correctly. And what you would also do thereafter, obviously this is just one simple time frame, but you would have this as multiple time frames. So you'd be looking at 5, 10, 15, or whatever your preferred array, your preferred horizon, your trading horizon would be. You would be looking across it, because on the faster time frame, we've got strength across the complex, no question. You'll be looking at 10, 15, and on and upwards to see what's going on, to see if that sentiment is actually moving through into the slower time frames. Just hopping over onto the array, this is on 15. So we're on the 15-minute time frame. This is showing us the strength of the trend and also giving us another view in terms of the optimal pairs to be trading and how they are likely to perform for us. And as you can see here, that strength in the dollar, whilst we're seeing it, we've got buying of the dollar here against the Canadian, but the cable is up here. So we've got a little bit of selling of the dollar here. So it's not entirely a mixed picture. It is very much a mixed picture on the 15-minute time frame. Certainly on the 5-minute time frame, it's pretty much universal. But if that sentiment continues longer term, then what you will see on the array and also a slower time frame on the matrix is that will then gradually start to develop as these pairs move up and down the ranking ladder in the slower time horizons. In terms of trading right now, the strongest for the dollar at any rate, or the weakness in the New Zealand dollar is down here. So that's certainly one that might be delivering better than the Aussie dollar, which is up here, for example. If we just hop over to the charts themselves, slightly different to Anna's, as she mentioned. There we go. This is what the sort of arrangement I like to have. This is the Aussie dollar. I've got the 5, 10, 15 minute across the top of the frame, and down at the bottom I've got the 30 minute. This is the Renko, and this is over onto the daily chart. And really, just to put it all into context, if you just pull up the daily chart, it just gives you a sense of, because when you're an intraday trader, you can often think that you're seeing quite dramatic moves, and yet when you look at the daily chart, it really just reminds you of the fact that actually we're trading in a pretty narrow range. In fact, for a lot of the morning, there was a lot of flip-flopping around. Currencies weren't particularly going anywhere strong, and it's often the case. At the session crossovers, we mention it all the time. When we come into London, you'll see trap moves develop. It's an ideal opportunity for the market makers. But more importantly as well, is that when you get to these periods, you will often see strong reversals. And moving into the US session is a classic, where what's gone on in the London session over a 4-hour period is often reversed quite dramatically as the US markets get underway and say, hey, awfully interesting, but this is what we're going to do. We're interested in this. We're going to buy this. We're going to sell this, whatever it is. And you see those moves develop quite strongly. So as you go through 8 o'clock UK time and then 1 o'clock, 1 in the afternoon UK time, that is what you start to see. You start to see that shift in sentiment, that change in focus, change in emphasis, and the reversals can be quite strong. So I just remind you that the daily is a whether you're an intraday scalping trader, whatever your time horizon, always have a daily chart up. Now what's interesting, if we highlight, just pop up the 5-minute there. Again, on 5, this was similar, very similar situation to the CAD yen, which I'll pull up in a minute. A lot of volume coming in. Volatility was triggered in real time. We've moved into the spread of the candle. We're starting to see a potential reversal develop with a lot of volatility. Haven't got volatility on 10, haven't got volatility on 15, nor on 30. So there's nothing to confirm that, but it's a signal that potentially that's what we're expecting. So if you're on a slower time frame, maybe you're trading at 10, 15, maybe you're down at this sort of level, and you're seeing the market start to reverse off a nice trend. What the 5-minute does, it just gives you a heads up, just gives you another piece of the jigsaw, a bit more information that, hang on a minute, we've got volatility here. We could well be seeing a reversal, or at least, at the very least, a move into a congestion phase, because what the volatility indicator triggers is a move outside the average true range, which is more often than not, and as you can see here with the volume associated with the insiders and market makers getting into the market moves quickly. They drop the market or rally it very fast. You as a trader don't want to miss out, so you jump in, and then you're left stranded high and dry at one end of the market or the other as this congestion phase develops. And this could well develop into a full-blown reversal. Who knows? But the worst case scenario is that you're sat there being squeezed emotionally as the market tracks within this congestion phase. So it's a great indicator. It triggers in real time, so you don't have to wait for the candle to close. And the other thing about the current trading where we are right now, we're trading around the volume point of control. You can see it here, this yellow line. This is the VPOC. This is the heaviest concentration of volume on that particular time frame chart. It is the fulcrum of the market. It is the point at which the market is in price agreement, so there is no strong bias to one side or the other. It's a balance. You can think of it as a seesaw with the two weights pretty evenly matched, so the market is not really going anywhere. And in order for that to move, it's got to be driven away by volume. So whenever we're trading around that, we expect congestion, we're getting it develop, and we've also got it across the time frames. It goes out to the 15. That's the 15-minute, pretty similar picture there. Just starting to see a transition on the trend monitor, but it hasn't yet transitioned into full-blown bearish sentiment right now. And down onto the 30, similar picture there. We've got the volume point of control there. So we're trading around. We're trading in an area of very heavy congestion, very heavy volume. That's what we're expecting to see. And until we break away from this region, and bear in mind, this is 5 pips, this is 10 pips. This is not a huge range. This is only maybe 20, 30 pips in this range. So it's a question of being patient, waiting for the market to develop sentiment, and then isolating it out either through the index itself, which I've got over here on another workspace with the indices, Here we go. I've got the dollar, I've got the yen, and I've got the euro. I've got the yen on the left, the dollar in the middle, and the euro on the right. This is the dollar index. So we had this sharp rally, and we're starting to see a bit of weakness come in. That's the reason we're starting to see a pause point, certainly as far as Aussie dollar is concerned, maybe on the others as well. So that initial surge, that initial strength in the dollar has waned somewhat, and we're now seeing a pause point. Let's just head back to the charts again, and I'll just change these over to the CAD yen.
That's interesting because I'm in that at the moment.
Oh, okay.
That's fine.
Just moving that over. There we go. And this is what I was referring to earlier on. This was a trade I was in this morning, and then as the volatility comes in, it sends us an alert. That was in combination with the fact that the currency strength indicator was also giving us that information that the Canadian dollar was very heavily oversold, weakness. Then we get the volatility, and that's an immediate warning signal that pay attention. We've moved outside the average true range. Expect the market to congest. And what we've actually had on this occasion, we've actually had a full-blown reversal from bearish trend to bullish trend. We had some congestion, but now it's picking up in terms of developing into a bullish trend. How far is this likely to go? It's probably not going to go that far, because now what we're seeing it start to approach the volume point of control yet again for this particular currency pair, which is up here, the yellow line. That's the heaviest volume. You can also see the amount, just eyeballing it, the amount of price congestion we've got in this region as well. Very heavy price congestion. And that's also confirmed with these levels here. We've just hit this level here, this blue dash line. This is the accumulation distribution indicator on NinjaTrader. It's pretty similar to the support and resistance indicator on MT4 and MT5, because what it's looking at is price-based support and resistance. In other words, the number of times this region of price has been tested and either acted as support or acted as resistance. So it's hitting a decent level here, because the thickness of this line is also generated by the indicator. So the more dense that area, then the thicker the line. These levels here, you can see they're a little bit thinner, and you've got a number 1 here. This has been tested once. This is 2, this is 1. And these down here, 3, 4s, those sorts of regions. This is a 3, I think. And it just gives you an indication of the strength of that resistance, or the strength that that platform may provide in terms of support to the price action. So they're working off price, whereas the volume point of control is really giving you a heads up in terms of support and resistance through the prism of volume. In other words, the concentration of volume at all these different levels up and down the chart. Because the more volume there is associated with a price region, then the more difficult it will be for the price to break through, because there are simply so many orders sitting up there, people trapped in weak positions, all sorts of orders have been placed up there, and it is just a region where you expect congestion. And what the volume point of control also then goes on to tell you thereafter is that as you approach low volume regions, in other words, here, for example, if the market gets to this level, then there's very light volume. So you expect the market to move through there very quickly. Equally to the downside, if we break through, this volume is declining all the time through here. As we get to down to this low volume area here, if it gets down to this region, as a trader, we expect that price action to move through there pretty rapidly, because there's nothing in the way of volume to prevent it moving. And also, on this occasion, in terms of price, it's very lightweight in terms of price, potential price support. We've only got very limited there, there, and there. So we wouldn't expect that to cause too much of an issue for a move lower. Let's just drop that out the way, see where we are on the other time frames. Pretty similar picture again. This is the sort of price action we're seeing right now, and it's a question of being patient. This is on the daily for the CAD yen. Very much trading in a pretty tight range. The volume point of control is way up here, so it's well out of place. We've got some low volume above, so if it does manage to break through there, we've got a minor platform here. We've got a minor potential platform here if it were to hold above that, but it's kind of acting as resistance right now. But if the market gets through that, then in terms of travel, we've got a decent opportunity for it to travel through here, because we've got very little in the way of price, in fact none at all, in price resistance acting to prevent it moving higher, or indeed in terms of volume. So from a trading perspective, and this is on a daily chart, but it could be any time frame you care to mention, if we do get a hold above, let's say 82.50, 82.60, something like that, we've then got a very solid platform in below us. We've got very little in the way of resistance, either volume or price related, above us. So, that could develop into a decent opportunity. What you're seeing down here in terms of the trend monitor is you're seeing the transitional phase of color change. We've gone from really the spectrum. We've gone from bright red, then we've gone into dark red, now we're into dark blue. And what we're waiting for now, if we were to take a position in the market over this particular time horizon, we're waiting for a transition through into potentially a bright blue to signify that we've moved through into a bullish trend.
You've got Canadian up there, though.
Yeah.
Can I just say something about
Yeah, of course. I'm just going to switch off for a minute. Paso, do you want to change screens or? Yeah. And finally, we've got the Renko down here, which is just a fabulous tool to use with a time-based approach, because it smooths out everything. Indicators working exactly the same way. You've got the trend dots, you've got the pivots, you've got the accumulation distribution for support and resistance. We've got the trend monitor there as well. It's just a brilliant way to blend non-time based with time-based charts. Just going to pass back to Anna. Anna's just changing the screens and just flicking down the questions. Lisa, just to answer your question, in the chart where all the US dollar buys were grouped green at the top and red at the bottom, what are those units? Let me just, I'll pull that up on my screen and I'll just answer that for you. I'll come back to you on that one if I may. Bear with me a moment.
Yeah, the CAD Yens is interesting. It's actually one that I'm in at the moment, and I'm actually long this pair at the moment. And the decision to take a trade to the long side, not on an intraday basis, but really looking it to hold longer term. Now, longer term for me is not, it could be days, very rarely weeks. It is more. It is going to be days, but this is where one of other indicators come into play, and this is the heat map, and this changes dynamically, and it's been designed not only to give you a ranking on which of the 28 pairs are performing most strongly, either are being bought strongly or being sold heavily, because they help us to to look for potential reversals. But when you're in a trade also, it's really a great indicator for monitoring, and when you use it together with, and I will do with the with something like the daily chart, it also gives me the heads up of saying to me, okay, I'm long this particular pair, and now the CAD yen, as we can see here, has actually dropped back to 28, and that tells me that there's obviously been a pullback in my position. I haven't checked my position. I think I'm still slightly in profit, but it just tells me two things. First of all, as an intraday trader, I would look at the heat map and say, is there a potential for maybe a buy or a sell counter to what is happening in a slower time frame? Because ultimately, whatever time frame you trade, you're always going to be trading counter to something, to the price going on in another time frame. And the only question you have to decide is whether there is enough in the potential move that you're seeing setting up in your preferred time frame. But it helps to have a kind of baseline, if you like. You say, well, if the pair that you are considering is already, as we can see here, that it's now become the weakest, in the sense that there's been some selling of the Canadian, as we saw on the CSI. You could argue, you could say, well, is there enough in there for me to take this trade, or is this sell-off that we're seeing at the moment simply a pullback in perhaps what is going to be a longer term bullish move higher. Now we've had the bullish move higher. You can see here we had this big volatility candle being triggered with it's a huge hammer candle. So this on its own is telling us that at this particular juncture there's a ton of buying that came in there, and that is reflected in the wick of the candle, and you can see the volume came in underneath it. It is both supporting volume and buying volume, and it's quite unusual. After you see a hammer candle, price tends to then go into congestion. It didn't on this occasion. You had a reasonable amount of volume coming in on an up candle, quite a widespread up candle. Then you had another upspread candle with a reduction in volume. Then you had a very squashed candle with a slightly higher volume underneath it. Now, what that is telling you is, yes, there is definitely buying in that 3 candle combination, but the buying is if you like, it's struggling. So what we can take from that is that, yes, if it's going to move higher, it is possibly going to struggle. So it's coming to a pause point. Now, the next candle is actually very interesting because there's a lot of volume underneath it, but again, it's a squashed candle. It's almost as if there's a lot going, and it's a doji as well, which tells you there's a battle going on here between the buyers and the sellers, and neither side is really coming out on top. And in fact, we keep seeing volume coming in, but nothing is happening. Then we have our first pivot to the top here. When the pivot appears, the pivot is another of these indicators that we have developed to help us frame, if you like, the price action that we see on the chart. You get a fantastic example here. When this particular pair was in this very, 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 very long congestion phase that we can see here, rotating around the volume point of control. Now we know when price is around a volume point of control, at some point it will break in one direction or another. But before that break happens, the pivots will fire. They are based on a three candle price action. So they fire to the top, to the bottom. Then we have one here. Then we have, and what it does, it helps us define these periods of congestion. And the longer these periods of congestions carry on, then when you do get a breakout, the stronger that breakout is likely to be. They are supportive of price action. They will help to highlight those points on the chart where the price is going to, as we saw here, is possibly going to be pushed lower. And then, if you like, for a point of potential entry, having seen this enormously long congestion period, we have the pivot here, we have that low, we have the pivot here, we know the price is going to reverse. From an entry perspective, you say, well, at what point would you get in? Well, you wouldn't get in on a one indicator signal, but you know that is going to go lower. The general tone is lower because we have the trend monitor, which is a bright red, but you probably wait until you certainly break through this low here, and in fact that then precipitated this very, very strong move lower, which was brought to a halt with the hammer candle and the price support that came in. And CAD yen, it's got the Canadian in it. It's going to be linked with oil. So whatever is happening is oil is going to affect the Canadian dollar. And with the yen in the pair, it is also going to be a barometer of risk sentiment. If the yen pairs are all being bought strongly, we know that market sentiment is going to be positive. Now, where are we at the moment? Well, what we've got here, we've got two little pivots here that have been fired, one to the top and one to the bottom. So we're kind of we're perhaps moving into a congestion phase of price action. But from my perspective, in the sense that I am long this particular pair, what happened yesterday? There was a nice move higher, but the volume underneath that move was lower than the previous day. So that on its own would tell me that to expect some kind of pullback. Now, this is the pullback that we've seen here. This is the candle that's being formed as we speak, with volume coming into it. There is likely to have been enough in this move to take an intraday trade. From my perspective now, I need to see where that volume ends at the end of the session. If that candle stays where it is, or even goes down a little bit more, the low is taken out, but that volume doesn't come in very high, that tells me, do you know what? I don't think this is going very far. There's not enough volume in there to drive that price lower, because you need volume to move the price higher, but also to move the price lower. And for speed, I then just look at the, let me pull it up. I seem to have lost it temporarily. There we are. I've got my heat map, which tells me that, you know, yes, it is at the bottom of the heat map at the moment, but I've got the daily, is that these little cells, that's where the selling has come in, right up to the hour. The 4 hour is still green, the daily is still green. So I'm still going to, given what I've seen with regard to the price action and the volume, I'm just going to wait and see what happens. And the fact that it is so overextended, then, you know, at some point it will, everything reverses. This is a market of mean reversion. David and I were talking about it earlier on, and we said, well, why would you, you know, should you intraday trade, you know, should you trade stocks intraday? Well, apart from the cost involved, and there are, you know, with forex there are so many advantages, because it does have this sinusoidal pattern. You know, currency pairs rise, they fall, they rise, they fall. Sometimes they're driven by additional volatility, because, as I said, because of fundamental news, politics, etc. And it's this, there isn't any other market where you have this consistency of these waves, if you like, of buying and selling, that will allow you to take advantage of the price moves. It's from our perspective, and it's fascinating because it's, as I said, you are looking at two currencies, you know, two currencies, and you're also making an evaluation, not only a risk assessment on what you see, but also an evaluation of individual currencies and individual country economics. Right, here we are. This is the hourly chart. And this now tells me that I am very much in congestion, because I've got another of our indicators, the Camarilla. This gives me the key, if you like, levels to watch out for in terms of, you know, if price is going to go one way or the other. Now, okay, it's only 15 minutes into the hour. Between the R1 and the S1, we consider that the buffer, the neutral zone. It's now going sideways. There's no strong direction. I've already seen on the daily charts that the daily chart has fired off a couple of pivots. So, you know, if this is going to move higher, I have to accept it's probably going to be a grind, because that's what happens. So if there's going to be no strong move one way or another, maybe what's today, Thursday, tomorrow, I may decide, I think, you know what, I've got some profit in there, I'll just scratch it and start again and go and look for something else. Is there anything else you want to say to that, David?
So just coming back to answer your question, Lisa, on the numbers I think you were referring to. The indicator I think you were referring to, because it was on my machine, was the currency matrix, but it also applies equally to the heat map as well. We had to develop an algorithm and a calculation in order to derive the ranking. So the actual numbers per se are not important. It's obviously the ranking on the ranking ladder. Now, having said that, with something like the currency matrix, what you'll find when you use it every day is that you'll pretty quickly get an idea of, certainly as far as the matrix is concerned, because it doesn't give you this information. The currency array does. It gives you a sense of when a currency pair is overbought and oversold, but the matrix does a different job. It's looking at it on that particular time horizon for all the pairs ranking up and down. But in terms of the actual data itself, do those numbers have meaning, the positives and the negatives? The short answer is no, other than it allows us to deliver the ranking ladder. But what you will find is that when you use it consistently, you very quickly develop a sense of, for example, in terms of the matrix, on a 5-minute, you might find that a plus 20 is quite a high number for that particular time frame, and equally maybe minus 15 is quite a high number at the other end of the ladder. you move to a 10-minute, you might find that 30 is a high number and minus 20 is a relatively high number. So what I'm saying is that you very quickly develop a sense of when a group of currencies is approaching what is potentially an extreme level as far as the matrix is concerned. So you can think of it, if you like, in a similar way to the currency strength indicator, where that information is delivered visually. In terms of the matrix, it delivers it in terms of the numbering, and in particular how that number, whether that number is high, very high, or average. So we didn't build that into the indicator. We might add that in due course, but when you use it on a consistent basis, you'll very quickly, as I say, you'll develop a sense of what is a high number, what is an average number, and what is a relatively low number. And if it's a low number, you know, they're all ranking there, then you can kind of use that as a yardstick to think, well, okay, they're all up there, but I think maybe it's got some more distance to travel. But of course, all of that is against the context of a chart anyway. But it's just another way of looking at the data. Don't get too hung up on the numbers per se. It's a mechanism we've used to actually, as I'm sure you can appreciate, to create that ranking ladder where we're looking at the pluses and minuses and how far those currencies have moved away from the midpoint, if you like, of zero. Hope that answers that one for you. If you do have any other questions, the guys on help desk will always be happy to answer them for you as well. But you know, we do try and answer them here also if we can. Just going to pass back to Anna.
Right. Okay. Just sorry,
just to jump in, the Aussie dollar is picking up momentum again to the downside.
Just quickly to wrap up on the CAD yen. What I've done here, I've gone down to the 3-minute chart, as you can see here, where with the levels, and you'll see the levels are very different to the ones that were on the 1-hour chart. That's because the way we've developed this indicator is, we think it's really neat actually, because the values for these levels that are calculated on the charts up to, but not including the hourly chart, are changed every day. So they're refreshed every time the session, we move into a new session. But on the hourly chart, they will stay there for the rest of the week. And the way we use levels, we play with levels, is that if you look at 2 time frames, say the 3-minute and maybe the hour, and you find the price is reaching what we call a confluence of, you know, it's a strong level. Something like the S4 is a significant level. The R4 is significant. You know that you know the price will either struggle to get through, or on the S4, if it breaks through the S4, it can be considered a break, an authentic, a genuine breakdown or breakthrough. But as always, everything has to be seen through the prism of volume price analysis. And if we look at actually the 3-minute chart for the CAD yen, we can see here it has actually reached the volume point of control. So you know, this is going to act as a kind of buffer, as support, much stronger support than, as David was saying, when you have low volume nodes, as we see here. There's nothing to stop price going through a low volume node at speed. And we can see that why, because we go back to this this volatility candle here that was triggered, that went through down very quickly. Volatility is momentum, it's speed. So, you know, the footprint that it left, if you like, when it was being formed, has resulted in this low volume node. Now, if it does get through here and the volume point of control, this dense area of volume, is insufficient, you know, to act as a cushion, as a buffer, where is this price, you know, where is it heading for? And in fact, this is where we look at something like the Camarilla, and we've got the S5. We've actually put 6 levels into this indicator. Most Camarilla calculations based on 4. And I've got the S5 here, which is just under the 81.58. And in fact, if we look at the 3-minute chart, it actually corresponds almost exactly with the low of this candle here. That's to the downside. Now, if it manages to stabilize and you know, just gain some traction here, where's it going to the upside, if you like? Well, you know, you've got this you've got this minor resistance here, this blue light, and then you've got this resistance up here as well. But I know, you know, it's a bit of a struggle today for CAD, yeah, because it's as I said, it's sitting at the bottom of the of our heat map, and you know, if it's I'm still, based on the daily chart, as I said, context. This is what we're seeing at the moment. This is the little, you know, the effort to rise reflected in this little wick that we see to the bottom of this candle. This is actually the other thing we have to be aware of, is obviously we've got candle patterns, and we see here that was a little 2-bar reversal, pushed it up. Now are we going to have the opposite happen, where maybe it's going to come back down, possibly into this congestion region, which seems to be developing as denoted by the pivots to the top and the bottom. And these are the kind of conversations you have with yourself in your head when you look at price action, so that if you're in a trade, as I am for, you know, longer, in inverted commas term, I look at all this and then I can think, yeah, okay, I've got my stop, so I'll just see how it plays out. The CAD yen, as I said, like the Aussie yen, very much also tied to general market sentiment. So if there's a souring of sentiment, I know this pair is going to react accordingly. It ain't going to be happy, but you know, that's just something that that comes with the territory. Do you agree? Do you agree?
Yeah,
is there anything you've got to say? Do you want to come over and see Aussie yen? We've got to stop. We've got another webinar.
You can click over here if you like for just 10 seconds.
Okay. Yep. David's got something interesting to show you.
Just changing screens again. Apologies. There we go. Just wanted to show you this. This is we'll be covering this in more detail shortly in the next webinar. But this is these are the indices. I've got the YM, the ES, and the NQ on 5-minute across the top line, and down the bottom line, I've got them on the daily for the same 3 indices. And as you can see, since 1:30 here, this is Globex. We're trading along. We've got volatility. We're in really no man's land. We're trading in sideways congestion. So, you know, that's what sentiment's doing right now. And it's just to pull it up onto the daily. That's where we are. This is the YM on daily. It's crawling higher in these relatively narrow spreads, but you know, the volume is supportive but not terribly strong. We're moving into some price resistance here, and you know, from an intraday perspective, which is, you know, we're looking at maybe the forex market from an intraday perspective, you know, this is what we're looking at right now. We're looking at very little direction, volume point of control sitting in an absolute ton of volume, volatility going nowhere, etc., etc., etc. So it just helps to paint the picture as to what is going on, particularly in terms of the yen pairs, as Anna's mentioned. But I just wanted to highlight that for you in case you're not coming along later. I'm going to switch off, pass back.
I haven't told myself. If you haven't been with us for the last couple of sessions, you wouldn't have seen this. We've actually refreshed the landing page for quantum trading. This is where all the information on the indicators, you'll find all the information on the indicators. That we think we've made them very, very much easier to navigate. And we can see here, these are the indicators, as I said, for Ninja 7 and Ninja 8. They're the same indicators, but for different versions of the platform. And then what you can do is you can click on the individual ones here. They actually scroll through every single one. I've pulled some of them up here. It goes on to another page. That one, that's the cost of the thing here, where what we've done is we've collated all the information about the individual indicators, so you will find all the videos on it, the support pages, you know, what's memorable about this indicator. This is the VPOC, this is the volatility indicator, and you can just work your way through, and it really does give you all, we believe, all the background you need for the individual indicators. What I mentioned also earlier was the forex program, and that's on another site. It's Quantum Trading Education. This is obviously David and I with our various monitors and what have you, and again, all the information that you need for the program is here. There are five. It's there are 5 modules, as you can see here. The technical analysis is it's founded on VPA, and it covers really from it extends what is already in the book, and it really goes into it in a very, very detailed way. And with VPA, the wonderful thing about it is, I mentioned the guy who who wrote to me earlier, and the VPA concepts have really have turned his trading around. He actually took it was Wyckoff's second law, David, cause and effect, effort and reward. Yes, yeah. He really got to grips with that Wyckoff's law, took the concepts of that and applied it, because he was already using order flow, he was already using other indicators, but that was his missing link, if you like. And that's the beauty of VPA. It's not VPA or the highway. You can use it all as your the whole of VPA is your foundation methodology, but it lends itself to being blended with other approaches, such as order flow, such as Elliott wave, such as Fibonacci. And as I said, there's the webinar library, so you can work your way through that site as well. Now, the cost of the indicators for NinjaTrader, this is the complete suite, is 1197, but you can buy them on an individual basis, and we also have what we call special bundled deals. So, for example, we've put these together. Sometimes traders come to us and say, well, I want to buy this one and I want to buy that one, can you do me a deal? We will always do a deal, and this is the sort of typical bundles that we have put together, and everything is on the website. But when you come to the education element, the education side, is what we've done is that's the cost. The cost of the education for NinjaTrader comes to 1694, but that includes the full suite of indicators. So it's not 1694 plus the full suite. That is it. The actual education bit only comes to about $500, less than $500, and for that you get, as I said, you get the 5 modules. It's about 50 hours of videos, 13 PDFs. You learn at your own pace, and it's yours to keep for life. And at the end of that, if you still need more information, you can drop David or I an email. And one other extremely important point is that when we develop indicators for our packages, if you have invested in the full package, they are added to your package for free, as are all upgrades. So you never have to pay us another penny, and everything is backed by our 7-day money-back guarantee. So if you need any more information, it's Anna@annacooling.com or David@quantumtrading.com. So thank you so much for coming along. Apologies again for the hiccup at the start of the webinar. As David said, we are back later, 3:15 London time, where it's day trading, really the indices, and we'll also take a look at some of the commodities as well. So thank you so much for coming along. It's been great having you here. Hope you've enjoyed it. Hope you've learned something, and maybe we'll catch you later. If not, we are back on Tuesday.